We're coming up on the middle of the trading day here in New York, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The tone right now is cautious and choppy. The big story hanging over everything, according to MarketWatch reporting, is the ongoing government shutdown and the news that this Friday's jobs report has been delayed. That's injecting a layer of uncertainty into a market that's already trying to handicap the path for growth, rates, and earnings. On top of that, you've got a couple of big-picture undercurrents. MarketWatch notes the IRS is using prior funding to keep tax operations going for now, trying to protect refunds even as the shutdown drags on. That helps limit immediate consumer stress, but it doesn't solve the broader confidence question. How long does this last and what other data gets delayed? We also got a mixed read on the real economy. U.S. manufacturers had a strong January in terms of new orders and activity, but as Jeffrey Bartash highlights, a lot of that looks like a calendar effect rather than a true breakout from a tariff-driven slump. Traders are treating that as good now, uncertain later, which tends to cap enthusiasm in cyclical and industrial names. On the opportunity side, pockets of strength are showing up. Palantir is one of the standout individual stories. Christine G. at MarketWatch points out that one analyst now sees the stock as less frothy, citing fresh government contracts and expanding margins as reasons the long-term case is firming up. That kind of narrative, less speculation, more contract visibility, is the sort of thing growth investors often gravitate toward on days when the macro picture is cloudy. In energy, there's a notable deal. Devon Energy planning to buy Coterra in an all-stock transaction to bulk up in the Permian Basin. Tommy Kilgore reports that shareholders aren't thrilled with the structure in the very short term, but strategically, traders are reading it as another sign of consolidation and scale building in U.S. oil and gas. M&A like this often reshuffles leadership within the sector over the next several weeks, not just the next several hours. On the risk side, the AI trade is flashing some warning lights. According to Brittany Nguyen and Christine G., both NVIDIA and Oracle are sending similar messages. Oracle is raising more debt, and NVIDIA is walking back its targeted investment in OpenAI. For a trade that's been priced for relentless growth and capital spending, any hint of balance sheet caution can make investors more selective. Traders are watching to see if this remains a story about just a couple of names, or if it starts to spill into broader AI, chip, and high-multiple software baskets. Layered on top of that is the bond market's quiet tension heading into midweek. Vivian Liu Chen highlights that on Wednesday, Treasury's refunding announcement will be scrutinized closely. Any signal that the government is going to meaningfully ramp up the size of future note and bond auctions could rattle rates traders, and by extension, equity valuations. That's a sleeper story right now, but it could quickly move to center stage if supply surprises to the upside. Another under-the-radar theme I'm watching is Tesla and the broader EV space. William Gavin reports that Tesla is seeing sharp January declines in new vehicle registrations across several European markets. That's feeding a narrative of a tougher demand environment and more competition, which tends to make investors more careful not just with Tesla, but with high capex, growth-dependent auto and battery names tied to the EV story. Into the next hour, the key watch points are any new headlines out of Washington on the shutdown and data delays, rate market chatter around that Treasury supply outlook, and whether the pressure in AI-levered names deepens or stabilizes. I'll also be watching if the strength in specific stories like Palantir and energy M&A can offset the growing macro unease. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets.